And it is Thursday, so we have natural gas, folks, coming out at 10:30. We're going to go over to the NADEX platform, take a look at a few of these defined contracts, and see if we can set up a volatility trade for either 11 or 12.
Yeah, for either that 11 a.m. expiration Eastern Time or maybe noon, where it's about 10:18 right now Eastern Time. We get the numbers at 10:30. So we pulled up the NADEX platform. We're looking at the natural gas contract, September futures contract. We're trading a hair under 295 right now. So what we like to look at is possible maybe volatility trades. You're getting exposure to the upside and to the downside. And really, you're just looking for a move in either direction with the inventory numbers coming out at 10:30.
Right. We got quite a move yesterday in oil.
Oh, man, we were talking about it earlier. You traded $3 in oil over the course of yesterday. And when we set up this similar trade in oil, oil spreads are $1.50. And I mentioned to you at the break that oil was trading at $68 at 10:30 when the numbers came out yesterday. And it was trading at $66.50, the full $1.50 by the noon expiration, which we'll check out some of the noons here. I don't know if natural gas is going to hit the same full expiration.
No, it doesn't seem like it hasn't been moving this morning.
And natural gas has a 20-cent exposure, which is much less likely than oil moving $1.50.
Right,
you know, but either way, so 11 a.m.s we'll start off with. We're trading, and what's interesting is we almost had to double check to make sure things are all right on the charts because natural gas has been so calm this morning in terms of how it's usually been moving. So yesterday morning, this is Wednesday, we went from about 290, we're hanging at 295 essentially. Here are 11 a.m. expirations. This would be your bullish spread, going from 295 to 315.
Yeah.
Now again, we're literally right to the tick at 295, which is nice. So you have no intrinsic value. You're just paying premium, and basically it's charging you 1 penny a premium, which is 10 ticks, $10.
Right.
And I would expect it's going to be the identical on the flip side, and there it is.
There it is.
So you're looking at between 10, 11 as it's ticking around, $10. So you're looking at $20, which would mean you need about 2 pennies of movement. And these are the 11s. So let's jump right to the noons. Same exact prices. Only thing changing here is that you have an hour. And what's nice is you get to compare them identically, so you get to literally assign the exact price to that hour, right?
Yes.
So here's your noon expiration, and here's your 11. So instead of going from 295.4 to 295.9, it's ticked up about 4 ticks for that extra hour. So it's going to cost you about $13 to $14 for each side of that spread. And then flip it around on the negative side as well, I'd expect, and there it is, $14 on the flip side as well to 15. So you're looking at closer to 3 pennies, $30, right? So that's an easy, just keep in your head, 2 pennies.
A penny for an hour.
Right? Yeah, totally, man. Penny for an hour. And natural gas ticks in 1/10 of a penny.
Yeah.
So that's going to be $10 extra. So it would be either $20 for the 11s, $30 for the noons, and just putting it out there too, if you're directionally biased, you can be $10, you can be $10 or 1 penny basically to go bullish on either direction. And that's, you know, sometimes if you really have a feeling on this, what's nice is jumping back to the 11s, it really is 1 penny. So market's at 295, you're selling it at 294. Are you okay selling it 1 penny below market?
Right.
With
defined risk.
That's what I was just going to say. With in mind that you have exposure down to 275 and your risk are capped out at 295.
Pretty amazing.
The key there being that we're going to get a big market moving number in 8 minutes.
Right.
You know, that's what you're paying for.
And, you know, what is intriguing out here this morning, which is unusual, folks, and that's why, Tommy, we had to look at it again, that the natural gas market hasn't moved off this 295 for 6 or 7 hours.
I mean, I literally looked at the chart. I said, man, I don't know. That looks like it's just been hanging at that price. Is that legit? You know, it's like, because normally this is moving pretty rapidly.
Right, and if you're looking at the chart, folks, it looks like it moved. But that's not. That's only a penny spread.
That's what I was just, but once you back it out, really what's going on is it looks a little choppy because it's literally only 1 penny from 294 to 295. It's been shopping around in that 1 penny since last night's close, basically. I mean, there you are at 4 o'clock yesterday. 1 penny of movement, even almost less than that. And so we get the numbers at 10:30. We'll see how they shake out. Not bad prices if you're looking for volatility, right? If you're looking for volatility, if you think there could be action after that number, whether it's until 11 a.m. or until noon, you lock in that defined risk and you see what happens. Let's check back in on natural gas.
Yes.
Give it a few minutes. Oh, we got a little volatility here.
Look at that.
Look at that.
That's good.
So we spiked all the way almost up to 296. We're now below 294.
Yeah.
So again, recapping that, you know, we needed about 2 pennies of movement away from 295 for the 11 a.m. expirations. We would have needed about 3 pennies of movement for the combined cost of both legs of that trade for the noon expirations. So again, backing it up for yesterday's move, putting things in context because we had such a tame morning, but still, nonetheless, you're getting 2 pennies of movement from high to low now, and you'd still have plenty of time in expiration left, whether it was the 11th or the 12th.
This, yeah, on the particularly, yeah, either the 12 or the 11, we just may get something going, particularly because we had no movement whatsoever, and you know the 16 hours before that, 12 hours, and now you just broke the consolidation. You know, so
we'll see what happens. Check back in.
Pretty cool.
You got it, man. Let's check back in one more time for the hour. So, not the kind of action you would like if you were looking for volatility, as in, yeah, we got a penny movement upwards, we got a penny movement downwards, but then we came right back to basically what would be your max loss if you were trading both of those, which would be 295 because you expose your upside or downside from that price level. So that would become your max loss. If you're dealing with the 11 a.m.s, see what happens in the next 5 minutes.
Totally.
If you're dealing with the noons, you'd have an extra hour. One thing to note is if you were trading directionally where you just took one side or the other at 11 o'clock, you did get almost a penny in either direction, which was going to be your cost on each side. So low price trade, but when you're trading both sides of it, you want some movement, and it's sitting right where it was before. So we'll check back,